Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Friday, March 7th, 2025. This is Nelson John. Let's get started. India's Nifty 50 has tumbled 14% from its peak in September, ranking among the worst performing global indices in 2025. But there is a silver lining. India's steep valuations have cooled, with MSCI India's forward P ratio dropping from 23.3 to 17.93. Market watchers are now asking, is the worst over? A Motilal Oswal report suggests this correction, lasting 6 months, is nearing its end. Historically similar drawdowns have paved the way for rebounds. Meanwhile, Jefferies India sees potential outperformance ahead, citing past trends where MSCI India bounced back after periods of underperformance against MSCI emerging markets. However, uncertainty still lingers. Tax cuts and RBI policy easing will take time to filter through, while global trade war fears remain. Investors will watch upcoming inflation data, which is due on March 12th, and the RBI's next rate decision in April. Meanwhile, all eyes will be on the US Federal Reserve's March 18th-19th meeting for signals on global liquidity. For now, the road ahead is bumpy, but history suggests a turnaround may not be far off. Fintech giant Razorpay is making its next big move, expanding into Singapore, its second South Asian market after Malaysia. The company aims to streamline payments for businesses, slashing cross-border transaction fees by up to 40% while offering real-time multi-currency transactions. As one of the most advanced digital economies, Singapore is the ideal market for our next phase of growth, said co-founder Shashank Kumar. With digital payments projected to hit $180 billion by 2029, Singapore's near-total cashless adoption makes it a primary opportunity. Razorpay's international payment gateway, Golek, which launched in Malaysia last year, is already seeing 30% month-on-month growth. The company plans to replicate that success in Singapore as well, where small businesses still grapple with high transaction fees and fragmented payment systems. Backed by investors like Tiger Global and Peak 15, Razorpay reported 2,501 crore rupees in revenue for FY24, with net profits surging 34 crore rupees. While expanding globally, the Indian-born firm is also preparing for a potential domestic listing, flipping back to its roots while setting sights on a fintech-dominated future. There was a time when millions of small business owners in India struggled to access credit, their dreams held back by lack of collateral and complex banking norms. Entrepreneurs, shop owners, tailors, street vendors, they all faced hurdles, unable to secure the funds needed to expand. Traditional loans remained out of reach, limiting their potential. In 2015, the government launched the Pradhan Mantri Mudra Yojana (PMMY), offering collateral-free loans to empower small businesses. Since then, 31.85 trillion rupees has been disbursed, with the bulk of the amounts going to Tamil Nadu, Uttar Pradesh, and Karnataka. Because of that, over 516 million loans were sanctioned, enabling businesses to grow, create jobs, and drive financial inclusion. In Q3 FY25 alone, a record 3.39 trillion rupees was disbursed, proving its massive impact. Recognizing the demand, the government has raised the loan limit from 10 lakh rupees to 20 lakh rupees, effective October 2024. Meanwhile, non-performing assets under the scheme improved, dropping 3.4% in FY24. Today, India's small business ecosystem is positioning itself to be stronger, proving that when given the right support, entrepreneurs don't just survive, they thrive. For the longest, Afcon's infrastructure kept its distance from the Middle East. The projects were cash flow negative, said MD Paramasivan Srinivasan, pointing to tough contract terms and sluggish payments. But as Saudi Arabia and the UAE embarked on trillion-dollar construction booms, Afcon is making a strategic return, but this time with local partners to mitigate risks. The company recently set up a 90% owned subsidiary in Saudi Arabia and is bidding for Dubai's $8 billion sewage tunnel project alongside UAE's NMDC and India's ITD cementation. The Middle East is too big to be ignored, but we'll be selective, said Hitesh Singh, head of corporate strategy. While rival L&T's Middle East orders now make up a third of its 5.6 trillion rupee backlog, Afcons treaded cautiously, with overseas projects comprising just 15% of its 380 billion rupees order book. However, analysts see international margins outpacing domestic ones by 200 to 300 basis points, making the pivot potentially lucrative. With an identified pipeline of 3.2 trillion rupees over the next 2 years, Afcon expects to add 180 billion rupees in annual orders by FY26. The stock gained 3.5% on Thursday, though it's down 11.5% from its November debut. The company's bet: strategic plays, not aggressive expansion. For years now, India was a tea-drinking nation. But a new wave of young, affluent consumers is reshaping the market, and Nestlé's Nespresso wants in. Stepping into this booming coffee culture, Nespresso has launched its first boutique in Delhi's Nexus City Walk Mall, targeting consumers eager to replicate city-style coffee at home. Young consumers are exposed to coffee trends through social media and cafes. Now, they want that experience at home, says Philip Navratil, Espresso's global CEO. The boutique offers Nespresso machines starting at 16,500 rupees and premium coffee pods at 95 rupees per capsule, far pricier than Nestlé's instant coffee sachet at 5 rupees. But Nespresso is betting on a rising premium coffee market, with expansion plans for Mumbai and other metros, reports Sunira Tandon. Beyond retail, India's hotel industry presents a huge opportunity as Nespresso sees massive potential in India's business-to-business sector, supplying coffee to five-star hotels, office, and corporate lounges. With India's cafe market projected to grow at 8.1% annually, Nestlé is making a long-term play, one that could redefine how Indians experience coffee at home and beyond. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a fabulous Friday.